What if I told you that there was a way that you could improve your credit rating whilst making money at the same time? Stay tuned to find. All right, so yeah, I've been thinking about a way to improve your credit rating and make a little money at the same time. I've been doing some research into it. And here's the thing real quick, like I thought it was something that I came up with. Apparently it's a thing that people do. And not only is it a thing that people do it enough where there's actually a name for it. It's called credit cycling. So I was like, damn, I thought I invented this. You know what I mean? I thought I at least, just thought of it and it was a cool thing that not many people knew about. But no, it's a thing that people do and enough people do it that there's a name for it. So anyway, I want to talk to you guys about credit cycling and how I think it can help you out. First and foremost though, I ain't no financial advisor, expert type guy or anything like that. And truth be told, there's no real good reason for anybody to pay attention to anything that I'm saying. I'm literally just a guy on the internet. I look up stuff, I read stuff, I try my best to understand stuff, and then I share what I know, how little that is, with however many people end up watching this video, all two of you probably. But yeah, what it comes down to is that the same types of things that rich people do with their money, I believe poor people can do with their money as well. We just do it on a lower scale. So yeah, I'm not talking about making the big bucks and that kind of thing. That could hopefully come later. But for now, it's something that most, if not everybody, can do that could help either improve your credit rating, or if you already got a good credit rating, it would help maintain a good credit rating whilst making a little extra money as well. So yeah, it's called credit cycling. So what is that? All right, you're gonna need two things. You're gonna need a credit card and you're gonna need a savings account, all right? Now, specifically, you're gonna need an instant access savings account that calculates interest daily, okay? An instant access savings account that calculates interest daily. And the credit card, pretty much any credit card, but ideally, you've got one that sends you notifications. So anytime you buy something, it's going to send you a notification. It sends you a notification of how much you spent and how much you owe by your next payment. And also one that has the option to set up automatic payments. So each month it just automatically clears the balance. That way you're never going into the red zones and things like that. It's just automatically clearing each month. Because if you use your credit card responsibly, it's one of the ways you can build a good credit history, because you're borrowing money and then you're paying it back on time. You're borrowing money and then you pay it back on time. Now, I know a lot of times people like to avoid credit cards because of the temptation involved. So I ain't gonna lie to you. There is definitely some discipline involved in this. You cannot get dumb with this. Otherwise, it's just going to ruin everything. You absolutely cannot get done with this. You need to have some discipline in order to do this. But if you set up notifications, if you stay within your limits and ultimately just commit to doing this, then yeah, it's something that can improve your credit rating and make a little money. So here's what you're going to do. Now, every month when you get your pay and you start going through your finances and you're sorting out what needs to go where and this, that, and the third, this is how much you pay for your rent. This is how much you pay for your electricity bills. This is how much you pay for this. This much you pay for that, blah, 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 blah. If you're not doing that, you should be, by the way. But every month when you're going through your finances, you're going to set a certain amount aside for, your groceries, your food shopping, and just general kind of things that you want to get throughout the month. Here's what I want you to do. That money that you set aside for your groceries and that sorts of things that you normally spend on your debit card. So let's for example say that's £200 a month. It doesn't have to be. It could be less. It could be more. It really doesn't matter how much specifically it is. For this example, just say that you would normally spend about £200 a month on your shopping, on just your general kind of fun activities, things like that. You spend about £200 a month on your debit card. So when you're sorting out your finances, that £200 that you normally just leave in your account, that you use your debit card to pay for stuff, what you're going to do now is put that £200 into your instant access savings account that calculates interest daily. You're going to put it into that account. You're going to put £200 into your instant access savings account that calculates interest daily. And instead of using your debit card to pay for stuff, you're now going to use your credit card to pay for stuff, right? So the same things you normally buy, you're not buying more. Do not buy more stuff. Like I said, you still gotta have some discipline, you still gotta be responsible with it. So you're not buying more things, you're just buying the same things that you normally spend at £200 or however much it is you normally spend per month. Those same things that you normally spend on your debit card, you're now gonna use your credit card, and you're gonna do that throughout the month. Now, at the end of the month, you would have spent £200 on your credit card, right? And then what you're going to do is take the £200 out of your savings account and use that to pay off your credit card. That means you've borrowed £200 from your credit card and you pay back £200 on your credit card in time. And as long as you do it on time, you don't incur any interest on your credit card, and you have to pay it off in full. Don't just pay the minimum, don't just pay the minimum, pay it off in full. So it shows a responsible credit use. You use this amount, you pay back that amount. You use this amount, you pay back that amount. You do that every month. £200 used on your card, £200 paid back on your card. £200 used on your card, £200 paid back on your card. So you do that every month. It builds a credit history of showing that you can be responsible with money, and that over time improves your credit rating. Now back to the savings account. Remember, you put the £200 in your savings account at the beginning of the month. Now, because your savings account calculates interest daily, at the end of that month, say 30 days or 31 days or whatever it is, whichever month you're doing this in, when you take that £200 out, you would have incurred an interest on 30 days of you having £200 in that savings account. Okay. Now, like I said, it's not going to be big bucks, right? It's not going to be quit your job money. It's going to be around about maybe 50p or something like that, really, in all honesty. It's not going to be a lot, but it'd be more than what you would have had you not done it. Furthermore, you should be putting money into your savings account anyway. So the money that you normally put into your savings account anyway, let's say you normally put in, I don't know, £10 per month after you've done all your stuff, you put £10 in your savings account anyway. Now, because you're putting the £200 in there, you're earning interest on actually £210. So you might get, 55p or something like that, or whatever it works out to. It's not going to be a lot, I know, but it'd be more than what you would have had you not done it. But you're still spending that £200. Remember, you're not spending more money. Do not spend more money. Do not be done with this. If you be done with it, you would actually ruin your credit rating pretty badly. So do not be done with it. Do not be dumb. That is very important. Don't be dumb. But yeah, once you take the £200 out, you pay off your credit card, you've earned a little interest on the £200 or the £210 or however much you had in there, you've earned the interest off that. And next month you do the same thing again. You do that every month. Now, there are a few things to note. Okay, there's a few things to note. One, and I'll say it again, do not be dumb with this. Okay, do not be dumb. You be dumb and it gets ruined. Do not be dumb. Be responsible. Okay, it's going to involve some discipline. And there's a few things you can do to help with that. One is set yourself reminders. Okay, put in your calendar app. Make sure that you are within your own limits. So you might want to set a reminder every week or so to just check. A lot of banks have, apps now where you could just go in your app and check how much you spend on your card. So you can maybe set yourself a reminder to do that each week just to make sure that you are still within. And if you're getting too close, to slow it down. There are some credit cards out there that send reminders. They would have reminders and notifications coming up on your app. Every time you spend something, a notification comes up, says you spent £2, you now owe £5. You spent £5, you now owe £10. It would have a notification that comes up on your app. If you've got a card that does that, it's even better. If not, that's fine. Set yourself reminders, but just remember, do not be dumb. Another thing to note is credit utilization. So that depends on what your actual credit limit is. If you've got bad credit at the moment, you're probably going to have a low credit limit on your credit card. So the credit limit is how much they're willing to, let you have on your credit card. In the beginning, it might be around about £300 if you've got a bad credit or something like that. And if you are using £200 a month, using quite a lot of your credit limit, using about 60-something% of your credit limit, ideally you want to be 30% or below of your credit limit. But in the beginning, when you have bad credit, it just kind of is what it is. So because you're using so much of your credit limit in the beginning, you're going to see a dip in your credit rating in the beginning. But over time, as long as you're being responsible and paying it back on time, set yourself reminders. If the app doesn't remind you, maybe just set yourself reminders anyway. But in the beginning, you might see a dip because you're using so much of your credit. But over time, the fact that you're paying it back on time, in full, every month, on time, in full, every month, on time, in full, every month, that would outweigh the fact that you're using a lot of your credit limit utilization. And maybe at some point you'll be able to get a higher credit limit. But if you do get a high credit limit, don't think, I could spend more money now. No, don't be dumb with it, okay? Like I said, you can use it to improve your credit rating. You could use it to make a little money on the interest. But do not be done with it. It's still going to involve some discipline. And there are things you could do that help to give you a better chance of staying within that discipline, like setting yourself reminders, setting yourself things to check, or using cards that set reminders for you. Another thing you can do is, if your bank allows this, and I think most banks do, but you might want to check. But another thing you could do is set an automatic payment where it just automatically clears your credit card. Now you still need to move your money from your savings account into your main account to do that, but once it's done, it just automatically pays it off. The point is, you want to make it so that you have as little chance as possible of being dumb. Okay, make as little chances as possible as being dumb. So set reminders, set things to be automated if you need to, but do not be dumb. Okay, so now another thing to talk about real quick is, why would you even want good credit anyway? Like, what's the point of having a good credit rating? There's a few reasons why you might want to have a good credit rating. Biggest one, the main one I should say really, is that you might need to get a mortgage one day. If you're looking to buy a house and you want to get a mortgage, you're going to need to have good credit, because if you don't have good credit and you're trying to get a mortgage, the only people that would be willing to give you a mortgage are people who are going to charge the ridiculously high interest rates, right? If you got bad credit rating and you're trying to get a mortgage, you're going to be fine that the only people willing to give you anything are the people going to charge ridiculously high interest rates. And housing could be expensive anyway. Right? Housing could be expensive anyway. And to have to go to somebody that's going to give you some dumb, stupidly high interest rate, that's just going to make it even worse. Another reason is things like, you know, if you ever need to get just a regular loan, like, it's a good idea to put money into your savings account, because you never know when things are going to happen. And it's always good to have some rainy day money, so to speak, right? But you never know when things are going to happen. You know, something might happen before you've saved up enough money to pay for it. And in which case you might need to go and get a bank loan of £1,000, £2,000 or something like that. And it's the same thing. If you've got a bad credit score, the only people willing to give you a loan are going to be the people that are going to charge you a ridiculously high interest rate, making it harder and harder to pay back. So it's really to your benefit to have a good credit rating. Hopefully things don't go wrong and you never need to take a loan, or maybe you'd be so rich you never need to get a mortgage, you should buy a house outright. But for most of us, you know, you're gonna have to get a mortgage at some point if you're looking to get a house, or you're gonna have to get a loan if something happens that you just don't have the money for right now. You know, you need a little extra, and if that happens, you're gonna want to go to places that can give you a low interest rate that you can pay back in a time that suits you, rather than having to go to a place that gives you a stupidly high interest rates, paying it back over however long, and then it's just messing you up. And then because it messes you up, your credit rating is going lower and lower, because now you're struggling to make the payments. You might miss a payment, which adversely affects your credit rating, and now it makes even worse because you have to go to another place and pay off that loan, but only people willing to give you a loan to pay off that loan are people just going to charge even higher. You're going to want a good credit score. So if you have a bad credit score, this is something you could do to help improve it. Now, it's not going to happen overnight. It's going to take a while to improve your credit rating, and there are services online you can check your progress of how it's going, like Money Supermarket do it, and some banks do it as well, where you can actually check your credit score through the app on the bank or whatever. But yeah, there's ways you can check your credit score for free online. So you can maybe set yourself a reminder to check those things online, maybe look at other things you could do to help improve it. But the point is, this is a way that you can improve your credit whilst making a little money, but you cannot be dumb. Okay, do not be dumb. Do it right and it works out. Okay, peace.